Imagine waking up and realizing your company just lost more money than most countries make in a year. Not in 10 years, not in 1 year, in just 3 months. That's exactly what happened to one of the biggest companies in the world. A company everyone trusted, a company people believed was unstoppable. But then, everything started to fall apart. Investors panicked, stock prices crashed, billions disappeared day after day. And the scariest part? It all started with something that looked like a smart move. So what went wrong? And how did a billion-dollar giant lose $100 billion so fast? Let's break it down. To understand this story, we need to go back, way before the crash. This company was not struggling, it was dominating, growing fast, making headlines, winning investor trust. People weren't just investing, they were betting their future on it. Think of it like a rocket. At first, everything looks perfect. Smooth launch, fast growth, everyone cheering. This company expanded quickly. New markets, new products, big promises. And investors loved it because the numbers looked amazing. Revenue up, user growth up, valuation going higher and higher. But here's the problem. Sometimes growth can hide weakness. Behind all that success, there was a crack, a small one, almost invisible. The company was spending a lot of money, more than it was making. But investors didn't care because they believed one thing: it will be profitable later. And that belief is where everything started to go wrong. Then came the turning moment. The company made a bold decision, a decision that looked smart on the surface, but risky underneath. They decided to go all in. More expansion, more spending, more pressure to grow faster. It's like driving a car faster and faster without checking if the brakes work. At first, nothing happened. Everything still looked fine. But then, small problems started appearing. Investors began asking questions. Where is the profit? How long can this continue? And suddenly, confidence started to shake. Once investors lose confidence, everything changes. Stock prices started dropping, not slowly, fast, very fast. And here's the scary part. The drop created more panic, and panic created more selling. This is called a chain reaction. One person sells, others follow, price falls, more people panic, even more selling. Like a domino effect, one piece falls and everything collapses. Within weeks, billions were wiped out. News spread everywhere. Headlines turned negative. Experts started warning people. And investors, they were running. Money wasn't just decreasing, it was disappearing. Then came the worst part, the realization. This wasn't a temporary drop, this was a collapse. The company's value kept falling, day after day, week after week. In just 3 months, over $100 billion was gone. Gone. Not moved, not hidden. Gone. Imagine building a skyscraper for years and watching it collapse in minutes. Investors lost trust, customers became uncertain, and the company was no longer seen as unstoppable. It became a warning, a lesson, a story people would remember. So what can we learn from this? Success can be dangerous, not because it's bad, but because it can make people blind. Growth without control is not growth, it's risk. And belief alone cannot save a business, because in the end, numbers don't lie. If you want to understand how money, business, and power really work, make sure you subscribe, because stories like this are happening right now, and the next one might be even bigger.